Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershoppingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, September the 20th, 2021. And today was, in my opinion, picture perfect. Yesterday's update, I had discussed that the market, in my view, needed to go down and would likely begin to accelerate and had very strong possibilities of reaching below 4,300 and possibly down to, I think it's just below the current low, around 85-ish, I think was the 1.618 of wave one. And it got all the way down to the 1.382, which was sitting at 403, and then drifted a little bit further. And so therefore, it came in perfectly. Let me just say that. And blasted off of that low, off of that support level, and gave us some pretty strong confirmation that the minor third wave is complete. We're now in the process of a minor fourth wave, and basically almost completed it. But we need to allow for a B wave decline, and that may bring it back 50%. And this is to 50, so about 57 points. So if we come back 25, we might get down to about here, maybe down to 22. And then put in a C wave up. So we're looking for that A, B, C type of a pattern. And depending on how low it gets, again, this wave A was 57 points. So there was a really sweet rally coming up off that low. Just totally incredible in my view, with the market being down well over 100. And then coming to basically close, not up on the day, but recovering massively from that low. Now, we're still going to allow for this little B wave down, get to support, then I'm going to be looking for a C wave up. The C waves are always 5-wave structures. So I'll be looking for a 1, 2, 3, 4, 5. And it's kind of going to be the same deal within it. Wave 2 corrects 1, wave 4 corrects 3. 3 is most often the longest and the strongest wave, still because it's a 5-wave sequence. So we've got a lot that we can really be looking at to help us determine how high we're going to get. First of all, we will likely find some resistance. They may do this all overnight, by the way, and then set us up for the next leg down, which will then complete this first larger 5 waves down on a minor degree. And so, but we're going to find some resistance at that 20-day moving average at 43.60. Then we have Fibonacci resistance at 64. And then the next level would be at 43.86. And that would include up to the 200-day moving average. So that zone is actually 86 to 95 right now. So we'll see what it looks like tomorrow morning when we come into trade, or later this evening, just to see how the markets are doing and to see how this all lines up. So ultimately, I am not looking for a whole lot of a wave 4. Most common is this 0.382 resistance right at 43.64. And it usually will come up into the fourth wave of 1 lesser degree, which is right here. So we've got already into that zone. And now we'll pull back a little bit and then come back up. So I would think that the C wave, or the next leg up, would be pretty much with the same intensity and the same length as the first. We'll be able to measure that more cleanly once this intervening decline is finished. And so because we can run Fibonacci extensions for wave A coming back down to the bottom of wave B, and that will then project out what the C wave should look like, where it'll get to. So again, there will be some additions, and once I have them, I'll be putting them into the trade room tomorrow morning. Otherwise, unfortunately, you're going to have to draw them yourselves, and that would just be changing to extensions versus retracements, and going from this low up to that high, and then down to the low. So that's your starting point, that's your midpoint, and then your end point is going to be wherever this bottoms. And then that's going to give you the projections for where it's going to come up. Now, understanding that the first and most common is that wave C equals wave A. So wherever that's going to come in, and let's say that we're going from here, it's going to come up right to that 50% level. We got 50 points, $50. And this is sitting, that low is right there at 35. And this high is, or this resistance is at 43.86. That matches pretty cleanly. That's if this is the low. And so the lower, it does come down overnight. One would expect to have adjustments on how far it will go back up. Once it is complete, then I am going to be looking for a minor fifth wave. Again, this is the minor third. We have a minor four, and we will have a minor fifth. And that minor fifth would be expected to, again, break below the current low at 4293.75. Now, what I can do is go back up to my 4-hour chart. My computer catches up with me. Computer is slow. It had to take him so much data today. It was very busy. Obviously, if you traded it, you knew that. I just want to add the additional levels that we would have for wave 5. And actually, I'm sorry, I can do that from the hourly chart. I'm just pretty tired. And what we would do is we would take from here, again, now we're going to be doing wave 5, and the relationship is to wave 3. And so we're going to, let's just open this up. Come on. Thank you. And so you're going to come down from here with your extensions, and then up to where we would assume that the B wave would end. So if I change this around, I'll just give you an example. So I'm going to take away the retracements for right now and put in some measurements. And again, we're going to feel that this might come up to 58. Actually, it was actually 68, I think. 50 plus this low. It was, wow. All right, so let's start that. I'm going to come here, down to this low, up to where we think we might get. And I'm going to put it here at the top of wave 4. Okay, let's try that again. Very frustrating when the computer gets a little bit confused. All right, so I'm going here, down to here, up to here. There. Okay, so now I'm going to open this up a little bit again. And let's just estimate. So computer, 100% we're wave 5 would be equal to wave 3 comes in at 4189. More likely, wave 5, the most common would be that it's 0.618 times the length of wave 3, and that comes in at 4259. So it's putting in a new low and really comes in very cleanly. And so anywhere between here and here would complete it. I'm not looking for this unless it really begins to extend. And again, that's taking it as if we get up to 4372. If it really starts to extend, then we're looking at much lower levels. But I don't, wave 5 normally just come in pretty normal. And because wave 3 is the very extended wave and really just worked out perfectly. So I would not be looking for that. So let me put that back out and just kind of show you again. That third wave was perfect. That's classic. You get a 1 and a 2, and then that third just subdivides all the way down. Then you get a little 4, and then you put in that 5 to complete the 3. And it all came in. It came in at where support should have been found. It came in on the Fibonacci level. It was perfect. It was picture perfect. And so labeled and hopefully complete. And so again, looking for a little bit of a pullback and possibly back down to where I marked it. And then we get a 5th wave up and, or excuse me, a C wave up. And again, we were looking for 5 waves and we felt that it should find resistance right here. About 60, about 86 actually, but I don't think it'll get that high. It should get up to about there. And we'll pick it up again tomorrow. So continue to trade what's in front of you. Continue to trade according to what the bars are telling you. This was a massive bullish engulfing bar. And the market closed, which is why we're not seeing a lot of follow through. But initially, I'd be looking for a pullback to about that 50% of the move of that bar. And that brings us down to here. And then for the market to just launch again in a C wave up, C wave up. So it's an ABC up. It's correcting this very large third wave. That's it for today. The next update will be on Tuesday, the 21st.